Sure, as interest rates go up, so will mortgage demands. The banks tend to waste little time, although Peter pointed out they haven't reacted yet. But as the cost of a mortgage goes up, something else will go down, our ability to borrow more money. Car loans, renovation loans, mortgages will be weighed up against the Reserve Bank's increased cost of cash. Phil McGann is the Director of Claritude Financial Planning here in Brisbane. Phil McGann, are you seeing any impacts on the mortgage market with your customers at the moment?
Yeah, I am actually. There's less desire to be out there borrowing money. The capacity is a lot tighter than it was, and so that's actually having an impact. People are being a little bit more cautious to a certain extent, although we have sort of seen, and I've got friends who are mortgage brokers directly who've seen a bit of a lull, but the market is still fairly strong as well.
Okay, so I was going to say, what sort of feedback are you receiving from customers? You know, what you've got is sort of first-person accounts of how households are feeling about their ability to whether they're in secure employment, whether they're able to repay things and afford loans. And I was intrigued to know what sort of first-person accounts you're hearing, Phil McGann.
Yeah, look, basically what you're sort of seeing out there is that people are a bit anxious about things. They're actually looking at what they're spending funds on. The trip to the shop, the grocery bill is getting a lot dearer than it was. Electricity bills are higher. Obviously, all those things are adding up, and now you've got mortgage rates going up even further as well. So people's ability to actually spend more money is hampered, and so they've got to give up on other things as well. So there is definitely a note of caution in the economy, I suppose, out there. But that's the whole point of what the Reserve Bank is really trying to do. They're trying to curb activity in the economy to get on top of inflation.
As mortgage rates go up, and people have to put more money in the mortgage, the value at the same time the value of housing is going down. Apparently. Apparently. Are you seeing any evidence of this?
Well, not yes and no. I mean, over the last couple of months, definitely we've seen the official figures come out and things are a bit softer. Talking with real estate agents in the marketplace, a lot less people are turning up to open houses, less people bidding on property and that sort of thing as well. Okay. So the actual value of properties is easing off. But keep in mind, Steve, it actually jumped up, as we know in Brisbane, probably 20 to 30% over the last 12 months or so. So, we're coming off a fairly high jump up in prices as well, and the market's cooling a bit.
Okay, if people are starting to save money, Phil McGann, what sort of discretionary spending are they cutting back on? What categories, can you say?
Well, again, it's an individual sort of event as well. But eating out, maybe that extra coffee in the afternoon, those sorts of things, streaming services. So there's a bit of that. People are getting hit. The things they have to spend money on: the mortgage, the petrol, electricity, groceries. Those things are hard to sort of avoid. But if you go into the grocery store, people are maybe buying the cheaper meats and things of that nature as well, and maybe not eating out as often as they were, a year or so ago.
Phil McGann is Director of Claritude Financial Planning here in Brisbane. One of the things I've noticed, Phil, is that I look at sort of motorcycles and sort of good or motorcycles that interested me were quite difficult to see or find online. But all of a sudden I've noticed interesting motorcycles have all of a sudden started flooding the motorcycle sales websites. In other words, it looks like people are sort of trying to offload things that they think, okay, this is an expense, and something that I'm going to have to do without. I'm not sure if it's happening in other areas, but certainly in sort of the area of second-hand motorcycles and the like, that's one of the things I've noticed.
Yeah, look, that's a real comment. I mean, people are looking at that, and that may not be their main form of transportation, but it is actually a secondary one. And they're looking around to say, well, what can I save some dollars on? Maybe the motorcycle has to go. Maybe they don't want to get rid of it, but they have to because the cost of everything else is going up and they're not using it as much as they want. So that's a bit of a canary in the coal mine sort of thing to sort of show that people are giving up discretionary items, not as much as things they can't give up.
Yeah. Phil McGann is Director of Claritude Financial Planning here in Brisbane. This is ABC Radio Brisbane. The Reserve Bank announced another interest rate rise today. The talk is that there'll be another one, although apparently they're looking at that, Phil McGann. What do you think? How do you feel about that as someone who signs up mortgages and helps people do their financial planning if there is another rise in another month?
Look, there is highly likely there will be. As Peter said previous to me now, you're looking at probably next month, and then they may ease off. They probably won't go another half point next month, meaning 50 basis points. It might go 25, which is a normal rate rise in normal times, but we're not living in normal times. There's probably another one or two to go, and then they'll pause and see. The biggest issue I see is that the Reserve Bank has gone so hard so quickly. They haven't had time to sort of see what it's actually doing to the economy. And we're all sort of waiting for the dust to settle a little bit. You can see anecdotally people are spending less on certain items.
Yeah.
But the bigger picture is, will the economy really curb and actually go backwards? And that's a real concern for a lot of people out there. And whether there's something like that on the horizon.
Prior to some of the recent financial issues, people had home loans. They had a lot of value in their home because the value of their home was going up. So they were encouraged to borrow against the value of their home. What's going to happen now? How will this affect them?
Well, this is a wealth effect played out in real time. The idea that your home's worth more, so you feel a bit more wealthy, and so you spend a bit more money. You may borrow up on the equity on it. Well, it does work in reverse as well. And so if people are concerned that the value of their property is come off a little bit, they may not open the purse strings up as much, or they may not borrow as much, or may not be able to borrow as much because the bank won't lend them as much money. So that does actually have an impact on the amount of money moving around the economy as well. But keep in mind, Steve, that the economy's been running pretty hot for a long time. Unemployment is 3.5%.
Yeah.
We're running at almost full capacity to a certain extent, and what's showing up is inflation. And so the Reserve Bank is trying to curb the activity the only way they can by putting interest rates up to curb the activity in the economy to actually get that inflation figure down to more realistic levels, or what they have a target of 2 to 3%. Well, we're all the guinea pigs a little bit to see whether they'll be able to do it without crashing things too badly.
I want to ask you a question that's slightly tangential, but I'm wondering if it's affected by this. So we're reading at the moment that Queensland has a tax regime, a land tax regime that's been enacted, and it might affect people next year, where commercial and residential property investors, often mums and dads have got a second house or an apartment that they sort of use as an income stream in retirement, a bit like superannuation. But the state government has announced a new land tax regime which may actually change the balance a bit. It means that landlords or retirees who own an investment property in Queensland could be slugged, apparently, with, according to the Financial Review, with more land tax next year as this new tax regime comes into effect. So apparently, according to the Financial Review, Queenslanders who own an investment property in the state and a holiday home in the country are also facing a hit. Does that have any bearing, as far as you can see, as someone who helps people do financial planning?
Yeah, look, it does, big time, because what you're finding there is the state government in Queensland has decided we're looking for more revenue. Stamp duty is the main source of revenue for state governments, and they're actually looking at people who own property interstate to actually pay some of that. So it's difficult. If you own property in Victoria, New South Wales, as well as Queensland, you're getting almost double taxed, which is very frustrating. But it's a very clumsy tax, and it's a very not very clear. It's very opaque, and the impact of it will highly likely flow through to the rental market. People will see higher rents on the back of this because the landlord has to actually make up the tax somehow from the investments they do have. And we're in a very, very tight rental market at the moment, as you know. And so, there's not a lot of pushback, I suppose, on the other side. If rents go up to pay this tax, it's going to hurt the people in the society who don't actually have as much capacity as others.
I appreciate you coming on, Phil McCann. Thanks so much.
No dramas. Thanks, Steve.